Good morning, everybody. Happy Thursday. This is the morning show. Spencer, Steve, JC, Chartmaster, Rick in the house today. What are we talking about? What's on y'all's minds? What are we doing here? We got the Fed thing out of the way, thank God. Now we can get some actual action. We'll talk about that. What happened yesterday, the follow through from this morning, overnight session. I do want to hit on Oracle today. I do want to hit on Adobe today. I don't know what JC and Steve want to discuss. I don't even know what Kenny wants to discuss. I don't know what our guest, Steve Reitmeister, wants to discuss. It's going to be a surprise for all of us, all right? I don't know what Sean wants to discuss. Surprises all around today. If you're watching us on YouTube, do me a quick favor. Hit the thumbs up. I'd appreciate that. All right, here we go. I got JC. I got Steve. Let's do this.
Good morning. Good morning.
How we doing?
Dude, I got Disney on Ice tonight.
Oh, where do you go for that?
We
You gotta go to Manhattan for that?
Phantoms play. Where the Phantoms play.
So local.
So Disney on Ice today, Disney World next week?
Yeah, Disney World next week. Disney on Ice. I mean, you know.
It's a lot of Disney, and I like Disney. That's a lot of Disney.
Yeah, I mean, listen, the kids love it. I mean, and the Rockettes last week, so I'm doing a lot of a lot of kid stuff. I mean, I'm hitting it hard.
You should bring Spencer with you.
I've never seen Disney on Ice.
Spencer, enjoy your, there's a time and a place. It's not better or worse, it's just different, right? So enjoy what you've got right now. You got a nice little baby, barely even moving. You'll get there. And, they have full bars for the adults at the Disney on Ice, and it's great. It's lovely. You can get a bottle of Chateauneuf du Pape at the top of the Princess Castle for your lamb chops. They do a nice job to help out with the parents,
As they should.
Dude, the restaurant in Africa is so freaking good in Animal Kingdom. It's called, Rutgers or something like that, Rattlers.
I don't know.
Dude, I'm telling you. Shout out to Africa.
All right, we have a lot to discuss here in America about things, markets, right?
Yeah.
We actually got some movement yesterday. It was exciting.
Thought we would.
Ups and downs. Post Fed, right? You had the knee jerk reaction, then the knee jerk to the knee jerk, and then you had the knee jerk to the knee jerk to the knee jerk, of course, and then you got the overnight jerk, and then you get in the pre-market jerk, right? A lot of jerking around.
But nothing was really down in the session yesterday. We had a little sell-off after hours, which I think is pretty constructive, right?
Yeah, you had Zero Hedge being like, oh, timber,
Really?
S&P's down 75 basis points. This is the end. You had that all night. That's just classic. Shout out to Zero Hedge.
I think you do want to see buyers come back in and rally them today for a big follow-through day. But yesterday was green across the screen. Some stuff sold off in the last 10 minutes, a lot of the speculative stuff. But overall, it was an incredibly constructive breath day. It was one of those days where I could go count on one or two hands how many industry groups were actually down. So that's an overwhelming positive. But I think you really want to see a big follow-through day today. The Russell 2000, if we have that chart, we talked a few weeks ago when we really changed gears in our trading accounts and said, hey, the Russell 2000 just put in a momentum thrust and that starting line momentum. Now they just got to stick the landing. So you're seeing a follow-up on that, and the Russell 2000 is breaking out in a huge way. I don't know what could be more bullish.
So this is now 3 consecutive months of new all-time highs, by the way, for where the month closed at new all-time highs for the Russell 2000.
Yeah, but isn't that misleading? Because the chart hadn't broke out. So we're breaking out.
It's 3 months in a row of new all-time highs. That's it. It's not.
But what's that mean?
It's probably not evidence of a downtrend if it's closing at the highest levels ever 3 months in a row.
Yeah, but okay. That you don't think that's all right. So you think it broke out 3 months ago?
The close of the day is the most important. The weekly close is more important than that. The monthly close is more important than that.
So the Russell 2000 broke out 2 months ago on the monthly close.
Listen, we've been debating that, like, we got to see the breakout. We got to see it. And I think you may have seen it. We'll go back to the Time magazine now in a second, but yesterday something really interesting happened. And we'll get to the state of the markets, but I wanted to mention this is slide 4. Throw that up.
Transports.
No. Well, you're not far off from transports because there's probably some of that in there, but that's not what it is. Transports put it in a stick. This is the large cap value hit new all-time highs yesterday.
Yeah.
Small cap value hit all-time highs yesterday. Notice how large cap growth and small cap growth, neither one of them made new all-time highs yesterday. It's the value stocks that are leading here, guys.
That's right.
That's really, really interesting and a very different dynamic than we've been accustomed to seeing. And I wanted to nail down any thoughts on this, Strazza, but I got a point I want to make.
Value's good. Value's been good. Yeah, I like that. Sure.
So large cap growth, for perspective. Large cap growth is 52% tech. In large cap value, it's 11% tech. You've got virtually no financials in growth, and you got 22% financials in value. So a lot more value, right? What's interesting is that you have a very similar dynamic with tech and financials in small caps, right? On the large caps, you got a lot more tech and growth and fewer financials. In the value, you got a lot more financials, fewer tech. A lot more industrials, energy, and materials in the value as well in large caps. Now, you'll see a lot of that when you go down the cap scale to the small caps. The only key difference here, which I think is worth pointing out, is that in small cap value, you've got a lot less industrials than you do in small cap growth. Small cap growth dominated by industrials, which is really, really interesting. So that's the only change in the dynamics between growth and value as you go down the cap scale. I think it's worth noting.
I think it bodes well for energy. If you overlay any value growth ratio with any energy index, energy tends to be breaking out or trending higher in environments where value is actually outperforming growth. So
throw up the next one quick, just to close out this conversation on the growth value. So here's small cap industrials that are not heavily represented in small cap value. They're a lot more heavily represented in small cap growth, believe it or not. And here it is, new all-time highs yesterday. So when you say, oh, transports, like the transports are in here, they're in the industrials, right?
Yeah.
So it's not transports, but a little bit more broad than that.
Uber under some pressure lately. Is that a top in Uber, speaking of transports?
Well, let's before we get into state of the markets, can we go slide 3 there? This just came out on the overnight session.
How cute.
I don't think it's fake news. I think it's legit. How are we going to look back at this magazine cover? It's like, yeah, I remember that AI was popular and then stocks went on and ripped and everything like that. Or it's going to be like, whoof, that was the top. Like, how do you think we're going to talk about this in 2 years, 1 year?
I don't think we are.
You don't think we're going to talk about this? Okay.
I don't know
so you don't think
Time magazine.
What?
Who reads Time magazine anymore anyway?
Who's on the far left and the far right for that matter?
I don't know who these people are. I'm not in. I see Elon Musk and Jason Wang, and then the guy. What's the creepy guy?
Bowman?
What's his name?
Yeah, the OpenAI guy, Sam Altman is there. Sundar Pichai is there. Lisa Su is there next to Elon.
Who's the lady?
That's Lisa Su, isn't it?
Who's the other one?
The person next to Lisa Su. I don't know. That's what I asked. I don't know who the far left and the far right is. And actually,
I was wondering whether this was fake news or not. I mean, technically, it still could be fake news. It's not on the Time.
Oh, is that Zuck? I can't see. Oh, that is Zuck. Yeah. Okay, you're right. That is Zuck.
It's getting around. It's getting around. Just saying. And then that Oracle. What the hell's going on with Oracle? They invented new cancer.
Dude, find another joke.
I was saying to the guys this morning, Oracle's problem is Oracle's problem, not the market's problem. This isn't like a bank. This is just a software company, not a Mag 7. It's just Oracle.
And so what does that mean? It's not a Mag 7, it's just Oracle.
I don't think they're like a critically important company at all.
Really?
They had
to
a nice
the market
run.
or to AI?
The whole market. Like they were cool for a year. And we thought, oh, Oracle's an AI stock now. But no, they over-leveraged themselves and made some really bad moves financially.
They're a large component of the software index.
Of course they are. It's Oracle. I'm just saying it's not a problem for the market. This is a problem for Oracle specifically.
Oracle.
Yeah, this is not a systemic risk, is what
Yeah.
Steve is saying, right?
No. All right.
Yeah, I actually I was
Is
trying
this
to
an AI story? Sorry, is this an AI story or no?
yeah,
Mhm.
a little
is?
bit. Yeah.
All right.
Yeah, 100%. That's where the overspending came from. They were grossly irresponsible with their spending, and they don't have the big pocketbooks like the Max 7s to do that. So
Well, I can't think of a time in the last few years since we've been on this AI timeline where an AI company actually missed the estimates, right? That really hasn't happened at all, right? It's been a question of like how big are you going to beat by? But Oracle did. Oracle missed their top line revenue, missed their cloud and infrastructure revenue, missed. Yeah, so that was weird last night. So it's down. What is it down now? It's down 13% this morning, which is a lot for Oracle.
Yeah.
cats. Yeah.
All right. What do you say we do a little state of the market? Talk about things that are actually working because it's a bull market. I don't know if you heard. And Oracle, according to Steve Strazza, doesn't even matter. So what are we even doing here?
Yeah, I don't think too much about it.
All right, we got the Dow futures this morning doing nothing again. You're doing it again. Nothing. 48,101. 48,101. Close to a new all-time high yesterday. Didn't quite crack it. Doing nothing this morning. S&P is down 40 bips. 68.64 there for the S&P 500. NASDAQ 100 down almost 0.2%. 155 off the lows of the day. 30-year bond futures up 0.3%. 116 almost. Crude oil down 1.3%, back under 58. Copper up 1%, 540. Gold up 0.5%, 42.46. Silver up 2.75%. Silver pushing 63. Never seen it, Spencer. Never seen it. We got the VIX up slightly this morning, still at 16. How is the VIX still at 16? You got Bitcoin 90,000 and change, down 2,000 points this morning. You got Ethereum 3,200, down 4% this morning. You got Solana 131, down almost 4% on the day, and that brings the total crypto market cap. Mr. Spencer Israel 3.04 trillion, 3.04. How do we feel about this morning's futures?
I don't know. How do I feel? You tell me.
Is there a baby? Is there a baby back there?
The baby, he's screaming. What are you yapping about? Shush.
Is he long Oracle? Settle down.
I think that's the problem. I think he had calls last night. I think that was the issue.
Tell him, be like, listen, it's not a loss until you actually book the loss. Tell him
That's right. I should say that. Yeah.
Don't ever tell him that. Don't ever
Okay.
say those words ever again. No, I was just kidding. It's a loss whether you book it or not. Unrealized or realized, it is absolutely a loss. All right, what stands out from this morning's futures?
I genuinely don't know. Like I mean, the oil is interesting only because we've talked about it so much and it still hasn't shown much signs of life. So I'm wondering what y'all think about that. That's kind of the only thing that jumped out to me, aside from just the follow through on the action from yesterday in the in the S&Ps and all that. So.
The ETH BTC ratio bottomed out November the 4th, right? So since November the 4th, Ethereum's been outperforming Bitcoin. So that Bitcoin dominance really peaked at the beginning there of December. Kind of just a mess. So there's no real strong trend there between the big cryptocurrencies. The Solana ETH is an interesting one too. Solana ETH just made new lows yesterday, new closing lows. Solana ETH literally hit new 52-week lows yesterday on a closing basis. But, they're still right there. I'm curious to hear Strazza's thoughts. Strazza, on the Solana ETH, if Solana's ever going to start to outperform, this would be where it would happen, right? Otherwise, this Solana is going to fall apart relative to ETH there.
I'm thinking more just about like broader risk on behaviors that we're seeing across markets right now. And I look at crypto and it seems like almost like low hanging fruit. I got to come in and buy it. So I'm looking for a little dip and rip action here today.
Dip and rip in the crypto today?
Yeah, no, I think crypto you got to be looking at for opportunities here, and it's as much of an intermarket thesis as anything else, because the price action there still not the most encouraging. But I'm looking at this as a group, like crypto stocks in particular, like these things got to get up off the mat here. A lot of them, into support, off of support, but haven't got the momentum off of these big levels. I think it's coming. And I think with every passing day where we're out here talking about tech's good, these risk on stocks are doing good, some of these values and cyclical groups waking up, I think you got to look at crypto and be like, where are you guys? What's going on over there? And expect them more and more to kind of join the party.
I did some buying. I bought some NFTs. Give me some additional exposure there.
Yeah, there you go. There you go.
I got a barbell strategy, right? I got CryptoPunks and then Dick Butts, right? So I got like the speculative, cheap, deep value, and then you got the leaders, you got the bellwethers.
Yeah, I like it.
Slide two.
Very risky bets. You have a very risk-on crypto portfolio. Maybe one of the highest beta crypto portfolios I know. Look at that. These are the Dick Butts, right?
These are my new ones.
These are Dick Butts? Yes.
These are Dick Butts.
They don't have. All right.
So I got like, more than 10. I got a bunch of them. So throw up the and then these are the big ones that I've got. Throw up the new slide 3. So throw up the new slide 3. When I buy these things, generally speaking, I'm just buying the cheapest ones. I'm buying like the commons, right? So I'm not really picking and choosing which ones. So ignore their skin color. It has nothing to do. They could be white, they could be blue. Quite frankly, I wish they were blue. The blue ones are worth a lot more. But nevertheless, these are the ones. So the one on the right, these are CryptoPunks. The one on the right actually is the one that Tiffany's made the jewel, like the pendant.
No.
So I have like an iced out version of the one on the right. It's like the beard is like diamonds and like the glasses are like whatever onyx or whatever that black gem is.
Yeah.
No, I swear to God.
I believe.
I don't know what to do with it.
So someone is asking, what is the floor on the Dick Butts? What's the floor on both of them?
I think it was like 3,000. I think last I checked on the Dick Butts, and then the floor here is like in the 90s.
That's not bad. Yeah. All right. How are the apes doing? People still do that?
No, the apes are terrible. So good question, Thundercat. What does this have to do with the market? What this has to do with the market, in my opinion and in my experience, this is a leveraged bet, right? So, there was a time when Bitcoin and CryptoPunks were both at $100,000, right? Yep. Both of them. And then Bitcoin went on to $125,000 and the CryptoPunks went to 250, right? So that's a 6x return on the CryptoPunks at the exact same time that Bitcoin rallied 25%. So I'm thinking, okay, so Bitcoin's at 90, CryptoPunks are at 90. Which one would you rather own? Right? So in my opinion, it's a leveraged bet. So I hope that helps answer the question. That's how I'm thinking about it as an investor, as somebody who, my wife and kids are counting on me to make good decisions with our money. In my opinion, the best thing I could do for my family is to YOLO NFTs on the blockchain.
All right. Do you worry that this cycle's changed a little bit and all the same high beta vehicles that we relied on to outperform Bitcoin in the past, like NFTs and altcoins, no longer are in most cases this cycle? You know what I mean?
Well, I would argue the NFTs and the altcoins, you're right, but CryptoPunks are like different because they're like the blue chip, right? So they're like the Bitcoin of that world. So it's kind of just like a different story. It's a different scenario there with them. In my opinion, maybe that could change. I guess we'll see, and I'll lose money, maybe. I don't know, or make a lot. I don't know. I'm hoping for the latter, obviously. Right?
He loves the juice, people. He's after the juice, and can you blame him? It's the right way to act in a bull market.
Yeah, I could buy options on IBIT, but then you're fighting time. This way I get to own the asset. You know what I mean?
Not easy.
And it's not a leverage, ETF that you're getting that decay every day,
Sure.
right? So there's
Sure.
other ways to get juice, like in options and like in leveraged ETFs. But this seems like a better way to get the leverage
Maybe.
because I get
It
to
may
own
be.
the asset. And it's not like the most liquid. I mean, I can get liquid. There's enough liquidity. But if I had billions of dollars, then I could not do this, right? You see what I'm saying? Because it's be too small. So I'm still in a position where I don't have enough money where I'm out of this market, right? I'm still small enough, I guess, to participate in this kind of market. So I do, right? Hopefully one day I have way too much money to be in this market. That would be great. What a great problem that would be. I'm not there yet, So hope that helps.
I like it. Yeah. Look, I'm not.
No pushing back. You like my thought process there?
You know me. I'm gonna add leverage in my own way. Never really
you're fighting
had
time.
much-
You're fighting time in that leverage, or you're getting decay through the overnight resets. Right?
I'm comfortable paying for the time.
Okay, fine. But I'm just saying, there's a ticking clock in some of these assets. So for me, if I'm gonna put 100 grand in a freaking trade, I'd rather not have a ticking clock on it.
You could do options with big numbers too. People do. It's a little scary, but you could do it.
No, I trust me, I've done it. Yeah, been there.
Scary, but
I know. I don't know.
I like it, dude.
Believe it or not, like this is from the bottom of my heart. I feel more comfortable owning an NFT than putting on an options trade with the same amount of capital.
No, you're not gonna get pushback from me. I love the juice too. I think this is sound logic. What you're saying, it might sound crazy. The best thing I could do for my wife and kids is buy dick butts. But I get it.
I'm not just buying the dick butts. It's a barbell strategy. Right? Because I'm buying the high quality too, right? And at the end of the day, the high quality is 90% of the portfolio, and the other side is only 10%.
Yeah, they want me to push back on the dick butts. I can't. I get it. I'm picking up what you're putting down, JC.
Yeah, and then I can feed the ducks. When the dick bucks get to 10, I'll feed the ducks. When the crypto punks get to 300,000, 400,000, feed the ducks.
And you have no problem in getting out. There's plenty of liquidity in these NFT markets.
Especially when they're pumping.
Yep. It's like warrants. Sell them on an upgrade.
Yeah, kind of. Yeah. All right, let's go. Bring on Kenny.
It's been a long time coming. They ain't come for my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny in the house.
Bro. What's up? What are you laughing at?
I'm laughing at you. What's so funny?
I don't know. I haven't slept yet. You see the futures last night? We actually had a correction. What happened?
We did.
Oh my God. It was awesome. And it all happened so quickly. Guys, if you don't believe in the rigging, may I show you again? Let's go. Oh, wait. Did you see it?
Yeah, show them. So action yesterday, we had and then we had a great conversation yesterday after the Fed lowered interest rates. Spencer, if you could drop in the link, anybody who didn't catch that, go check that out. Kenny dropped by. We were talking about the action. You had so much going on. You had the rally, then you had the knee jerk, and then the knee jerk to the knee jerk, and the knee jerk to the knee jerk to the knee jerk. Then you had an overnight knee jerk, and then a morning jerk. Tell me. Let's like literally go through it, guys. Click the link in the chat, Spencer, if you could drop that.
Wait, but I do love the morning jerk. So can we just harp on that one? Wait, but yesterday, let me tell you about.
Isn't the morning jerk your favorite?
It is my favorite.
Yeah.
But what my favorite was yesterday, and this is let's get serious for 13 seconds here. You ready? Yesterday, as a shorter, I was waiting to see if this market would roll over, and I'm ready to short. I'm feeling short. I'm thinking, all right, they're going to sucker people in here, and it's going to roll over, and I'm going to slam everybody. Just waiting for that confirmation, right? So then here it comes. This monstrous chop. This is the chop right after the Fed, right? So we had the the big move, then we came outside that candle, which is bullish, but we got rejected. And then it came down. There's your little faux show, bro, right? And we start rallying, and I missed that move. And then lo and behold, it came back down. And I'm thinking, holy cow, if we break that recent low and then break the reaction candle low, I'm going to short and I'm going to go heavy. And then 2 minutes later, it turns and I'm like, well, there's a faux show, bro. I guess I got to go long. And that's it. You got to be able to switch right there. I'm actually sitting there with my finger on the button to buy 50 puts on the Qs. And next thing you know, I'm going like this and I'm buying calls instead. So that was a dramatic shift. So right there, if you're not ready to do that, especially as a day trader, you're going to be, first of all, you're going to be on the wrong side of this trade and you're going to get crushed. So, we had some fun with it. And then, again, it kind of ran out of steam. Really figured we would get to 630, but the real action was last night. So these levels that have been really, really significant, these triple bottom. Let me show you 10 days on a 5-minute. So we had these anomaly candles. Remember Fat Finger Freddy a couple of days ago?
Indeed.
Right? So here's the fat finger. We had the fat finger trade that day, and then we tested it to the penny. And then last night we went right to it to the same exact price. We bounced, but then we broke it. That was significant. And then look where we went. We went right back to the same 3 prints that we held right here. Triple bottom. These aren't moving averages, friends. These are exact prices on the Qs. We're talking about 100 stocks rolled into one of the biggest technology stocks on the planet, and they're going collectively all to the same price. Please, people, please. So last night when we held this, look at this bounce off that level. It went and tested the same price and just ripped. And now we got a Fat Finger Freddy trade right back to the highs.
Hold on. So the Fat Finger Freddy, that means we're going. That's where we're going?
That's generally what happens. So now, again, as the bear here, I'm waiting to see if we roll over, break the blue and the orange for a short, but Fat Finger's telling me we might be looking to rally. I hope Fat Finger's wrong this time, but you got to start factoring it in because we keep going to these out-of-the-money prints. So right now, again, I'm going to be cautious about this short. I do think there's going to be some residual selling because of all that action last night. Or we just go back to, watching Oracle and Gemmy. You guys know about Gemmy? They had some news.
Hold on.
Yeah.
What do you think the likelihood is that we don't go to the Fat Finger Freddy high?
Well, I tell you, the likelihood we don't, I'm going to go, I'm feeling a little bearish today because of what happened last night. So I'm going to go ahead and say there's only a 5% chance of it going there. But
wow.
If we start turning around,
5% chance of Fat Finger Freddy getting a visit.
Well, that's my bearishness coming through. I want to see confirmation of the down move. But listen, it would be an amazing
we hold
day.
that 1-day VWAP. We're not going lower.
It would be an amazing day if we go both. Like yesterday, we hit both of my levels that I was expecting. I would love that. That's why I love the little environment we're in right now. There's actually some sellers out there finally, but again, not enough to keep it down. But if we break yesterday's lows, actually last night's lows, we could have a cascade of selling that could bring us right back down to test that crazy bottom from the NVIDIA numbers, which was just 3 weeks ago today. So that would be awesome. I would love to see a nice bloodbath and then scare the shit out of everybody because I think there's going to be one more scary moment and then we're going to rally for probably 3.5 straight years. So, but, for us day traders, we're just looking to get paid. It's iRobot, baby. Come on. iRobot, you guys are watching this one.
We're back, baby. When we're talking iRobot, we're back.
Yeah, we're talking Andy Dufresne's, we're talking about Kardashian bottoms, and we're talking about it going to an exact price. So this morning, we saw it breaking that. This is the recent high. Stocks break recent highs, classic trade. Broke yesterday's high, go to the prior highs. Prior highs were around 608. Look where the stock went to this morning, my friends. 605. And right now, you just faux show broed. So our boys and girls in the Het the Bid chat room should be back in the iRobot. So wonderful trade. And again, this is our new open. This stock has been paying us for the last 4 or 5 days. And you guys see CV. You want to see a wonderful chart? Take a look at this bad boy. CV. This is going to be, when I do my next class in February, everything you need to know about trading right there. Some IPO, There's your reaction candle. Lived inside it. You got the faux, you got your show, you got your Andy Dufresne, you got a range break, and then it just broke into a blue sky breakout. And we were sitting there going, you know what? This stock looks like it could go to $20 any day. And about 3 minutes later, look what it did last night. 3 minutes after I got done saying, I kind of like this chart, wham! It went to $30. What used to take 8 or 9 years happens in 5 minutes now. I love this market. I remember when stocks would only go up 8% for the year. Now you're doing it.
my day.
Back in my day, you never seen any of this crazy tomfoolery.
The kids these days with their volatility.
It is a wonderful market to be a trader right now. Yeah, so I don't know if you guys know about ONDS. This one's been paying us.
Riley talks about it every day.
Love this stock. Trades very, very nicely every day. But I'm gonna be on the Oracle again. Now Oracle's confirming my whole entire bearish stance. This stock is telling me that this market needs to go down. That bullshit gap that got sold into, and now suddenly they went from having the greatest quarter in their history to disappointing 3 months later. I think this market's going down. And again, just give me one big whoosh down, and you could have your bull market back. But right now, I'm on my toes. I'm looking for some sellers to show up again today.
All right. And there you have it, ladies and gentlemen. Kenny Glick telling it like it is. The most bullish perma bear in the world. World.
And if you guys are around,
day trading.
Listen, if you guys are around today, we're going to be doing my podcast with Don Corleone. We're going to do it live around 4:15.
Don Corleone.
Yeah, dude has been making some serious calls. You guys know about VICR? Gave us this bad boy at $56. That's up at 100 now. He's the fundamental guy to my technical. So it's like a little yin and yang. It's pretty good. But
I like it.
Yeah,
I think it's great.
Email me. We're partying tonight. We're doing a podcast into the schmooze. So
send me an invite.
Gonna be a long night. All right, brothers.
Maybe I'll swing by after Disney on Ice.
Do it. Dice on Ice. Oh,
we're pre-gaming for Disney on Ice. It's gonna be wild tonight. Woo.
Nice. Be careful. Those.
All right. See you, Kenny.
Character get wild.
It's not Times Square, bro. They're not that wild in Disney on Ice. Like in Times Square, don't look at the animals, don't touch them, try not to smell them. But Disney on Ice is different.
Just don't even go there, actually.
As much as I hate Times Square, like sometimes I'm walking through there like by accident. Like you just can't help it,
Well,
terrible.
Yeah, they put it in the middle for a reason. It's kind of hard to go around it sometimes. You got to go through it. All right. Who do we got here? We got Righty in the house. JC.
Oh,
Steve Reitmeister is here.
Steve Reitmeister, legend in his own right. Speaking of value stocks, Steve Reitmeister, not a day trader, right?
No.
This is a guy who looks at a lot of different pieces of data to calculate whether the probabilities of success for this stock are good or not, right? And he looks at things in such a different way than I do, which I love. I mean, as much as I like talking to other technicians, like I'm looking at the charts too, bro. You know what I'm saying? So Righty's looking at things that I'm not looking at. I really like that. So
as evidence of that, we have this chart. It's slide 11. It is a chart of forward PEs by market cap. So we'll talk about this. It's a chart that you wouldn't normally see on this show. I'm excited. Let's bring him out.
Nice. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Reitmeister.
Oh.
Are we there? Are we centered?
There
he is.
Hey.
Mike is mute.
No, we're good. We got you.
Oh, we're good. I see him frozen though.
Oh.
Oh, Steve, I just saw you backstage. You looked great. What happened? Wait a minute.
Oh. All right.
Uh-oh. Steve, can you hear us?
No, we'll just get him in and come back in.
All right.
No, here we go.
So Righty and I'll tell you a little story. So Righty and I are walking to get pizza. We're on I don't know, 7th Avenue and 30-something street, 37th Street, something like that. We're gonna go get pizza. We're going to Lazara's. Nice pizza joint there, Lazara's. So we're heading over there, and Righty's like, I'm a fundamental guy. Righty's telling me about the S&P 500, how he buys the S&Ps and things like that. I'm like, Righty, that's like the greatest momentum strategy ever, the S&P 500, right? You know, it buys more of the good ones and less of the bad ones, or kicks them out outright. So I have made it my mission over the years to convince Righty that he is, in fact, a closet technician. And I think he's starting to come around. I got him good on that S&P one, you know, because it is a great momentum strategy. It's the greatest ever, right? People are like, oh, there's this momentum ETF that's better. It's like a momentum S&P 500 ETF that's better than SPY. But I don't know. I'm a traditionalist, you know?
Wait, let's try this one more time. Hold on, Steve.
Yeah. All right. How about now?
Yes.
We're good. All
Righty.
right. Yeah, I know you.
How was that
you
pizza
love
at
that
Lazara's?
story. You love that story. You got me, like, you kind of got me, right? And by the way, obviously I do a lot more than buying indices. You know, I pick a lot of individual stocks, but I was just talking about one or two of my accounts. But okay, you had your little moment. Okay, momentum story, blah, blah, blah. But I got to say, Kenny, I have followed him a couple times. He and I could not be more opposite. And it's
Right.
not a knock. You know, it's just, you know, different strokes for different folks. He likes his.
You're not looking at Kardashian bottoms and Andy Dufresne's and Fat Fingered Freddy's. Right. You're not doing that, right?
But I gotta say that the Grateful Dead hat does not match the vibe that he is giving when he is hyping up.
Yeah.
When talking about the stock market, right? The Grateful Dead hat is not a complete antithesis of his thing.
Okay, I actually don't think I know anyone who's been to more Grateful Dead concerts than Kenny Glick.
Okay, that's nighttime Glick. We were dealing morning Glick.
That's right, morning Glick. Nice, nice. So Righty, that pizza at Lazara's, was it pretty good?
Yeah, I mean, you know, all pizza is pretty good. Right. Even Domino's if you're hungry enough. But yeah.
You know, because in New York, we have real pizza. It's not like those casseroles they give you in Chicago. You know what I'm saying? You know.
Don't knock it. Come on. We're
all right. I had to. I can't help myself. Yeah. All right, Righty. You know, it's interesting that we're having you on today. This really is just a coincidence. I don't think we're smart enough to have planned this. But yesterday, you had a new all-time high in the Russell 1000 Value Index. You also had a new all-time high in the Russell 2000 Small Cap Value Index. So large cap value, small cap value, both hit new all-time highs yesterday. The growth, large cap growth and large cap and small cap growth, they didn't make new all-time highs. It's the value stocks that are really shining here. And as somebody who appreciates value much more than me, because, you know, I don't care, value, growth, whatever. If line go up, I'm in, you know. But for you who appreciates this sort of thing, like, can you, boots on the ground, bottoms up, are you seeing similar things?
Yeah. So I would say it kind of started in August, right? So we have that scary, like, almost bear market, you know, it's 20% correction in March/April, you know, zoom off that, everything's going up. But then, like, August was like the market kind of, let's call it a consolidation period for a little bit of time, change of leadership. The Russell was up like 8% on the month, right? When the S&P 500 barely went anywhere. It was finally time. It's been 5 years of sunshine for large cap stocks and people hitting the easy button with the mega caps and all that kind of stuff. It was time for the small caps to play. So let's bring up that chart, if you could, Spencer, the one you yesterday, because I think it kind of tells that story of why it's time for small caps to shine, because it's a valuation of the market. Yeah, there we go. Okay. So this is PE by market cap. I know it will make a lot of your fans glaze over.
Righty, I'm just happy you bring it in the charts. You know how happy
any chart would make you happy, right?
Dude, you're the man. You know your audience.
Right. So the pink line, that's the mega caps, right? That's your Magnificent Seven with a PE of 30 on average. The point is, what should the PE be? Well, you go back in time, there's no time in history in which mega caps were ever at that height or anything was at that height. we come down. So that's bubblicious territory, right? For the mega cap stocks, that's ridiculous.
Righty, can you explain to us mere mortals what a forward PE is exactly?
Yeah. So PE is the price to earnings ratios, the price of the stock divided by its earnings per share. The forward is that the earnings part is based upon the estimate of earnings for the year ahead. Okay. So there's the trailing 12-month PE, which is the normal PE. I like the forward-looking PE because the market is forward-looking. We are taking a look at what is happening in the future, and this is what we are paying up for. So forward PE is the healthier one, I think, to take a look at when making our investment decisions. So yeah, so mega caps are bubblicious. The red line is the large cap, so the S&P 500. I'm not going to call that a bubble. I'm just going to call that fully valued. If we take a look, we take that line back, there's only been a couple times we've been at that level, and one of those is the tech bubble of the late 1990s. This is we are fully valued S&P 500. Blue and green is small and mid caps. Yeah. Not just the gap between small and mid caps and large caps, meaning it would take 40% rise for small caps to meet up with the PE valuation of large caps. But just take a look at history. We're not even fully valued for small caps and mid caps versus history. So this is where the play is. And I think it kind of started in August. We saw a bit more of it in November. And I think we will continue to see that tide roll in. By the way, going back 100 years, small caps outperform, right? They're smaller, more nimble companies that grow more. Growing more generally equals higher earnings growth, equals higher share price appreciation. So the fact that that small caps and mid caps have been languishing this long, this is where the play is.
Righty, can you talk to me about the notion of the direction of these multiples versus the absolute multiple itself, right? So if the multiples are increasing, that's generally happening in an environment where the P is going up. So, right. So if the PE ratio is going up, just because the E can't keep up, right? It's more the direction of that multiple expansion or whatever you want to call it, more so than the absolute number. Can you tell me, is there anything there?
When the market is fully valued, let's say like the S&P 522, okay, then what should happen is that the market should go up by the rate of earnings growth, meaning that the PE stays level and that you are appreciating by that. So in 2026, earnings for the S&P 500 are supposed to go up 8%. This is why my target for the S&P 500 is 7,500, pretty much 8% above where we are now, meaning that the valuation stays the same, but we just go up by earnings growth. In the case of small caps and mid caps, they're so undervalued that even though their earnings might be growing 8 or 10%, they should be increasing 20 or 30% in the coming year, and therefore the PE lifting, right, to get to a reasonable point of valuation to meet up with their large cap peers.
Righty. I mean, from a price perspective, I'm seeing the same thing. I'm picking up what you're putting down. Getting to the same conclusion a different manner. In your work, are you seeing specific sectors within small caps that you think are, more undervalued, right?
Yeah. I haven't thought about it as much in that one. I think probably if I had like a favorite group, it would be industrials. The reason for the industrials is that in the Fed pushing down rates, so if interest rates start coming lower, industrials is a very loan intensive industry, cash intensive industry. So if we can push down the rates, we can push down the borrowing cost, we can make it more, and then their profitability starts to go up. On top of that, looking at a specific sector, something like autos, right? If you put on rates, you push down the cost of buying a car, it makes it more attractive to go to the dealer and get a lower rate on your car loan, right? And that starts pushing up the attractiveness of buying cars, right? So industrials overall, auto sector in particular, I'll throw out a couple of names, BWA and AL. Those are a couple of names that stand out to me as strong earnings performers in the current environment will be even more profitable and more attractive in a lower rate environment.
This is Borg Warner, BWA. This is
BWA,
auto
yep.
parts, right? So
Yep.
it's an auto parts situation. So it's
Yep.
interesting you consider that an industrial. I would agree with that. And what's the other one?
ALV, Autoliv.
ALV Autoliv, also auto parts. So S&P's considers these auto parts makers to be consumer discretionary. You would categorize them as industrials.
I mean, think about what they're making. You're right. I mean, you can split hairs, but
like
it's an
machines and
industrial
shit, like
manufacturing situation. Yeah.
Yeah, I'm with you. No, that makes perfect sense to me. Yeah, I get it. They're industrials, but I guess they're making consumer products at the end of the day. I don't know. No, that's really interesting, Righty. I really like, you and Eddie Elfenbein would get along really well. Do you know Eddie?
No.
I'll
Where's
put
he
you
from?
guys in touch. You guys can have a mandate. Yeah,
cool.
Eddie's great. Let me know next time you're in DC. He's there. He loves these like
Okay.
boring companies from the Midwest, like just like a company in Michigan that just makes like this like random
Or
gear,
Wisconsin.
like
Yeah.
WD-40, like he just likes like boring companies that just like print money, and he kills it. Eddie Alpha, you know what I'm saying?
Yeah.
Like, yeah,
It's
you guys-
worked for
you guys
Warren
look at
Buffett.
what-
It's worked for Warren Buffett, right? So yeah, cash is king, right? So we can get to the sexy AI stories, but this is also where you get ridiculousness, right? So I love the quote. I think some say it's Joe Kennedy, some say it's Brandeis. When the shoe shine boys and the taxi cab drivers are talking about the stock market, it's time to get out, right? So saying when the average guy who's not the stock market, when they're talking about it, it's getting frothy, it's time to get out. So I go to my daughter's house. She's got a young puppy, and I go there at lunch, and I walk in, and I meet one of the neighbors. Hey, what do you do for a living? Blah, 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 stock market. Oh, I'm making a killing in AI stocks, he tells me. So the thing is, I'm the professional. He doesn't ask me any questions because he's got all the freaking answers. He's making a killing in AI stocks. It's that kind of bullshit, right? Because it's so sexy, and yeah, of course we're all getting pulled in, but it's getting frothy and it's getting ridiculous, right?
So you're not long any of the AI stocks? You're not long those?
Okay. So this is the classic gold rush story, right? So gold miners rarely make money. It's the guys selling them the services, the guys selling the picks and the axes and the hotels and the hooker and all that kind of stuff. They're the ones making money, right?
Dude, long hotels and hookers all day.
Yeah. With a morning jerk. Sorry, had to. Boom, call back. Okay. So, right. So, okay. So let's go with Tudor Perini, TPC. Okay. This is a specialty construction firm, right? And there's a couple others, MTZ, EME.
Yeah.
They're all specialty construction, building out the data centers.
Mastech,
right,
that's a Miami company.
Okay.
Yeah.
TPC is my favorite in the group. I think it's the most reasonably priced here. Again, looking at a little bit of value, but they have tremendous growth. And the beauty of a construction firm is they have a backlog of business. So that gives them visibility into the future in terms of future revenue and profitability. Their backlog is just exploding higher. So so it's the services and all these things around AI that I'd rather play in than directly going for the Palantirs and the NVIDIAs, which are a bit play. It's like a football spread, right? When the P high, it's like a football spread. So yeah, the Los Angeles Rams are going to beat the Arizona Cardinals, but are they going to beat them by 53 points? No. Right. And it's that kind of crazy spread. They're going to win by 7 or 10 points. Okay, whatever. The spread's too high with the PEs where they're at.
Mr. Reitmeister, I like how you came in with your sentiment story. right? That makes a lot of sense to me. How else do you think about sentiment other than like what you said, like the shoe shine boy and the taxi driver? Other than that, like, is there a way that you quantify it more? Like, what other sentiment work are you doing?
You can't be in the market for as long as so yeah, I'm fundamentally based, economics background, but yeah, there's a mood, there's a vibe, there's a sentiment and things of that nature. I try not to let it be the first thing on my mind, but you gotta take it into consideration. Kind of think that Kenny's right, that we're starting to play it out on certain themes.
Look at Righty and Kenny
the
agreeing, getting along. It's great. Great.
Yeah. So yeah, and that's bad. It's like these two things should not work together. These things, but what started to happen the beginning of November, the AI sell-off and the rotation out of the easy button trades, right? That was healthy stuff, right? Taking some of the profit off that, moving around to other places, but then sure enough, everyone buys the dip, and here we are back at the all-time highs. We need another round of that. We need a real enema. Sorry for the mega caps and the sexy AI and
mega caps need an
stocks.
Enema. All right.
Yeah, to get them down to size. But here again, the best situation would be a sector rotation, money moving here again, mostly small cap, just some other groups getting some love. It rarely happens that cleanly, right? But the idea of everyone gets washed out, and then when they wake up, hey, valuations matter. Let's go for some of these other groups.
Righty, is that a Washington Redskins jacket you got going on there?
Wisconsin.
Is that west of New Jersey? Is that west of the Hudson River? Is that before you get to California?
You have like most people from the East Coast, you have like a map of the United States that falls off outside Pittsburgh, right? Like
that's right. What happens after that?
Happening.
It's like that. It's like that movie with Jim Carrey where he hits the wall. What's that movie with Jim Carrey where they watch him on camera?
Truman Show. Yeah,
the Truman Show. Yeah, that's what happens when you get past Ohio, right? And then all of a sudden you're in California or Vegas. Yeah. No, that's not how it works.
Sorry.
Righty, how does a Chicago guy like you get into equities like this? How are you not like a futures trader or like a commodities guy or an options guy? Like there's so much of that in Chicago. How'd you stay away from that mess?
My father was a financial planner, right? Specialized in putting together retirement plans, and worked for A.G. Edwards for 40 years. So yeah, I'm like 13 years old. I got my bar mitzvah money, right? Let's invest in stocks, right? And I even remember my first stock. It was a copper miner called the Zarco. I made 30% in 3 months. Luck, total luck, right? But I was in. Right. I saw my future, right? I saw what it was going to be. So yeah, stock market. Wanted to be a mutual fund manager, but I saw a different path. I kind of like the education and commentary that we do in this industry, investment research, investment insight, teach a man to fish kind of stuff. They eat for a lifetime. I kind of like that aspect.
No, that makes a lot of sense, right? Like you're not just some jock who's going to learn how to YOLO futures, right? Respectfully, right? There was a lot of that down there, right? We know how it is. No, but that makes a lot of sense. Like you just came from a different, you had a different path. So I get that. All right, ladies and gentlemen, Mr. Steve Reitmeister, righty in the house, coming into the morning show. Always a pleasure. Spencer will drop the link in the show notes so you can give Steve a follow. It's great. We'll have you back soon.
Right,
I want to talk about like the scoring system next time you're back. For real.
Yeah, absolutely. We'll do.
Yeah. All right. Later, Riley. Steve Reitmeister. Dude, Righty's cool. We break his balls. He's cool. He takes it,
Yeah, and he's part of our like Midwest network we got going on. We got a nice little group of people in that greater Chicago area, right?
Yeah, and Michigan, right, and Indiana, And
Wisconsin-
listen, I kid about the Midwest. I really think their pizza is disgusting. But other than that, I mean, just really the Midwest, such nice folks, right? People are so nice. Why are people so nice in the Midwest? You come to the East Coast, like it's just a different animal on the East Coast. They're so nice there. You lived there for how many years, Spencer? 7?
I was there for 7. Just in the chat, Righty is not active on Twitter, but Wall Street Zen, his firm, is. So I just dropped the link or the handle in the chat there to follow.
So
those guys.
what's the answer? Why are people so nice in the Midwest?
I don't know. I'm not a native Midwesterner. I couldn't tell you. I wasn't born there. I just
But you hung out with them for a while.
Yeah, they just are. I don't. Anyone in the chat from the Midwest? Why are you guys so nice?
Yeah, why are you guys so nice? You ever been to Brooklyn?
I don't know. Sean's almost from the Midwest. He's from Buffalo. That's like almost Midwest,
Yeah.
right?
That's Canada. And people in Canada
Oh,
are really
right.
nice.
That's Canada. You're right.
Yeah,
It's
people in Canada are really nice too.
better. It's a
Just
better comparison.
Canadians
All right.
are so nice.
Hey, let's bring Sean on and we'll hop. Market's almost open. Time flies when you're having fun. This happens.
Talking
every day.
Fundamental analysis and value. This has been a whole value episode. You notice?
Yeah, I didn't know that was where we were going today.
I didn't see it coming. Boo-boo!
Speaking of the Midwest, I'm glad we're having this conversation. I will tell you, growing up in Buffalo all my life when I was a kid, I thought I was an East Coaster. That's what I thought. Maybe it's because the Bills play in the AFC East. I don't know. But I always considered myself an East Coaster. And it wasn't until I moved to Chicago at the age of 28, I think I was when I moved to Chicago. And I started hanging out with Chicago people and Midwest people. I was like, no. Buffalo is way more Midwest than New York, way more.
So
So now I identify as a Midwesterner / Canadian.
You also lived in Chicago for a long time. But yeah, I was going to ask you, is Buffalo more Midwest or more Canada?
More Midwest, I would say.
Wow. Okay.
With a sprinkling of Canada, which is just what you need.
Just a sprinkle. I think it's a little more than that, but whatever. That's not here nor there.
I see a Cheektowaga in the house in the chat. Welcome. That's a Cheektowaga. That's a beautiful suburb in Buffalo.
Is it?
Sure is.
They got those there. They got beautiful suburbs in Buffalo.
They do. JC, when you get outside in the world, you'll find that most suburbs in America look the same everywhere.
Yeah, no doubt. When I go to Buffalo, I just go straight to Duff's or Anchor Bar, right? Just do not stop, do not pass, do not go to jail, right? Do not pass go, do not collect $200. What is it?
Yeah.
That's right.
Go straight.
Yeah. Our Cheektowaga friend is asking me if I remember the smell of Cheerios in the air. Absolutely, I do. Downtown Buffalo, there is a cereal factory, or I don't know exactly what they do, but I think it's a General Mills thing on the south side of Buffalo. And I used to work at the baseball stadium downtown, the AAA baseball stadium. It was called Pilot Field at the time. And yes, the smell of cereal in the air was a constant thing. It was
it's just sugar.
Nice. I mean,
you just smell sugar.
No, well, I guess it was kind of like a sugary smell. It was a sweet smell. It was nice. Better than New York City in August.
Would it give you headaches?
No, not at all. Not at all.
Because when we harvest the wine and all that sugar is in the air, it starts to get to you. It's a lot of sugar. So maybe it's not that aggressive with the cereal, but in the vineyards, it's wild. Because all the grapes are kind of getting squished, so the sugar just goes into the air.
No, this was a pleasant smell. There's worse smells you can smell when you're in a downtown area of any city, right? But this is a nice, pleasant smell.
Yeah, that's true. Mr. Shawnee, I know you're not obsessed with the VIX, but with markets just making all-time highs again and again and again, you got the VIX still above 16, which to me, I mean, that's basically suggesting that the S&P should move by 1% every day. It just seems elevated right now at the individual options level, which is where you like to live, and ETFs for that matter. Are you seeing elevated implied volatility across the board? Or are you seeing that contracting?
This you're disappointing me here, JC. If you pull up a chart of the VIX right now, you'll see that it's at the lowest levels it's been all year.
Why
this is
am I
not an
disappointing
elevated
you?
VIX.
No, it's
This-
not elevated relative to where it's been, but when you zoom out, 16 with the market at all-time highs?
I think you just need to, look at where it's been for the last year, and that's all you need to know. In fact, I'm glad you brought that up. Last night, when everybody was freaking out, when the S&P was down, what was it, 75 basis points at one point? I don't know what it was. I took a look at the VIX, and I saw that it was only trading with a 17 handle, and I was just like, this doesn't feel scary to me. I think this is a little overblown, and we saw it, right? We came back. I mean, we'll see what today does, but no, the VIX is not sending any signals of distress to me right now. That could change, of course, but it's not sending me any signals right now. But I will say that, my hackles are up a little bit, not in a defensive way, but this is the time of the year.
What are hackles?
What's that?
Yeah.
What's a hackle?
What is that?
Are you not a dog owner?
No.
Hackles are they're when a dog is like triggered and like afraid of something, or there's like an enemy dog across the park or something, you'll see the hairs on the back of their, like along their spine, go up. My dog does that. That's their hackles.
Sounded like something you'd buy at one of those adult stores.
Learned something new today. Thanks, Sean.
I'm glad you guys learned something new. But
Shout
anyway,
out to the hackle makers out there.
Anyway, this time of year, as someone who used to be, and I'm thankfully no longer anymore, but someone who used to attempt to manage a delta neutral strategy in index options. This was something I tried to do for many, many years with flashes of success and lots of struggle and regret. But one thing that it was a repeatable pattern for me, 9 out of 10 years, let's say, is that this time of year, this last half of December, anyone trying to manage a delta neutral book in the options market, in the indexes, would just get steamrolled, because the market would just kind of slowly drift higher.
Yep.
Slowly drift higher. There's maybe nothing exciting going on in the market. There might not be stocks ripping 20% a day or anything like that, but the indexes would just slowly grind higher, just wrecking any delta neutral portfolios. And I would go into the end of the year with a sour taste in my mouth. Like, man, it happened again. I knew this was going to happen. I thought I was prepared for it. And boom, got hurt again. Thankfully, I'm not in that position right now, and that's great. But it has me it's top of mind, because I'm looking at the market and seeing what it's
You've been there.
And I'm looking at sell-offs that are happening overnight, like we just had last night. I'm just thinking, these are buying opportunities. And I was listening to Kenny talk this morning, and the resident bear here, and I hear him saying that he thinks we're going to sell out today. Look, he might be right, but man, I've been in his shoes so many times this time of the year thinking, oh man, we're going to roll over and crash. And, we had one Christmas, I think it was 2016, 2017, somewhere in that neighborhood, where we actually did crash into Christmas Eve. I don't know if you remember. Actually, you probably remember that. We had like 3 days, and right into Christmas Eve, we crashed.
Yeah, that was 18.
Okay, that was 2018. Yeah,
I know, because
that was the end of 2018.
I was roasting a pig in Miami. It was Christmas Eve, and I was super long bonds. That's how I took advantage of the short. I wasn't shorting stocks. I was buying bonds instead, and I sold all my bonds that day. Now, that wound up being a good day to sell. If I would have turned around and bought stocks like a real man, that would have been the trade. And I didn't do that. I just sold my bonds that day. I remember it very well.
Well, I think back to that day, because I made a lot of money that week, and it felt great. And but it was that was like the only time I ever made money as a delta neutral trader. Because I needed that sell off, right? And so it worked, and it was great, and I made a lot of money. And it was like that one time that it worked against all the other times that it doesn't. But it's like that fix of a drug, right? Like, oh, I felt it once. I know it's coming. And so when I heard Kenny talking this morning about, he wants to lean short here, he might be right. But my what I'm looking at right now is any dip over the next couple of weeks is a buying opportunity. And I could be wrong, but that's how it feels to me, because I've been on the wrong side of this end of the year drift so many times. And
I'm with you on that.
I got a lot of scars.
I'm with you on that, Shawnee. I'm with you. I don't disagree with anything you're saying.
So that's what I'm feeling. That's my market take right now.
No, I like that take. I got no issues with that at all. It's right in line with what I'm thinking, what I'm seeing, what the weight of the evidence is suggesting. In my opinion, this silver is above 63.
That thing is just crazy.
Dude, I thought I had enough exposure in precious metals, and I clearly do not have enough exposure in precious metals. Like, I mean, I'm making money, I'm in it, but like, shit, man, I need to be in it more.
It's funny you say that because I was thinking differently earlier in the week. I was thinking I had too much, and now I'm thinking, no, this is good. I'm feeling good.
No, I feel like I have just right biotech exposure. I feel like I probably have just right energy exposure. But not enough of the metals. My metals positions are the ones that are, I mean, before it was like, I guess biotechs are still my best performers, but like metals are right in there too. Man, I wish I had more of these things.
Well, you know,
Damn, there's opportunities out there. I might buy one today.
This reminds us of the old trading maxim, and this is nothing new, but I saw Peter Brandt, our mutual friend Peter Brandt, tweeted this morning, and he said that when you're making money, your size is never large enough, and when you're losing money, your size is always too big. And here it is.
Every time,
yep,
you're seeing it in real time. I mean, you know, but you know, to my credit, in this case, if we get another ripper, and silver goes into 70s or 80s, I will look back and I will say I did not have enough, not because I was right and you never have enough when you're right, but legitimately, right? And if we go back and I'm like, hey, you know, let's say biotech's rip, it's like, all right, I'm not going to go back and say, oh, I wish I owned more. No, I owned what I needed to own, right? And I'm good with that, right? So that's the difference. With the metals, I will regret it, I think. With others, I won't.
Well, you've had a good year. It's okay to have a couple of regrets.
I mean, yeah, I mean, for sure. One of the best years, maybe the best of my career. I know Strazza and you, same thing, right?
Yep.
Yeah, Sean, didn't you double this year without ever risking more than 2% on any trade?
Oh, well, we're far beyond that now, Spencer. But yeah, that was back in September.
Me.
Yeah, back in September, we doubled the portfolio. Yeah,
that was 3 months ago. All right,
we're not just talking shit and running our mouth around here. I mean, there's legit money being made. So, guys at home, if you're following along, I mean, I'm telling you, I mean, these guys, Sean, Strazza, putting up their best years ever. I'll have to check on my own. I'm pretty sure best year ever for me too. But yeah, you know, we're doing well. Hope you guys are following along, and I appreciate all the support, you know, that you guys give us. You know, you could be anywhere in the world, but you're here with us. You know, we appreciate that.
Well, hey, it's good you have in your best year ever, perhaps. It's good that you have a couple of regrets. It keeps you humble, keeps you on your toes.
I mean, in this business, I mean, are you kidding me? You know, fortunately, I played baseball my whole life where, you know, if you fail 70% of the time and you do that your whole career, you get inducted into the Hall of Fame, right? So you go into the game knowing you're probably going to strike out and ground into a double play and pop and hit a pop fly, but then maybe you hit a double in the gap to win the game, and that's really all that matters.
That's right. That's right.
pretty much.
You play to win the game.
Let's get out of here. I do want to mention our newest show. Actually, I want to mention two new shows real fast. Both debuting today. It's a busy day for us here on the network. Our next show debuting in 20 minutes, 10 a.m. Eastern time. If you saw yesterday's morning show, you know what we're talking about. Stephen Weitzel from Reveille Wealth is hosting the $1 Million Question live at 10 a.m. right here on stockmarkettv.com, on YouTube. If you're watching this show on YouTube right now, when we end here in a minute, it'll automatically take you to that stream, which starts in about 20 or so minutes from now. Today's $1 Million Question, can you time the market? Is it possible to time the market? Stephen has the data. He has the charts, and he'll be talking about that. So very excited for that. And then Thursdays are already a busy day for us. So we have this show. We have the $1 Million Question at 10. We have Kenny going live at 11. We got Gold Rush going live at 2. We got Sean going live at 3 with the Options Jam Session, which he's been doing every single week for, I don't know, how many years, Sean? Like 4 or 5 years at this point?
That sounds right. Sounds right.
A lot. And then our other new show, we've never really done an evening show before, but we're doing one starting tonight, Thursdays at 9 p.m. Eastern time. So in 12 hours, Crypto After Dark with Louis Sykes. So a lot going on today. Yeah. Pull up a chair, grab a beverage, and talk crypto.
I love the irony that it's going to be called Crypto After Dark,
I
but
know.
for Louis, it's like early morning.
I know.
Yeah.
That's
That's
part
what
of
he
the
tells me. He's like, "Oh, good morning." I'm like, "Good morning, man."
that's
I'm
part of the
ready
fun,
to-
right?
ready
It's
to open
after
a bottle
dark
of
for
wine and
us.
start making dinner.
Yeah, after dark for us. It's morning for Louis. So a lot going on today. Busy day for us. So let's go. Let's get to it. Everyone go make some money. Thank you for watching. Thank you, Righty and Sean and Kenny and everyone in the chat as always. And we'll see you tomorrow. Or we'll see you elsewhere on the channel. All right.
YOLO
Bye, guys.
responsibly.
Shout
Good
out
night, man.
Harmander.
Run it. I can't take no loss. I don't even know what it costs.